Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber. Sunday, December 19th, 11:17 a.m. New York time. Look at the intraday weekly periods on the 4-hour candles at the futures. So we'll start off, each candle will be a 4-hour. Looking at the US dollar index. Looking here, right here, past Sunday when the markets opened Sunday until we closed there. So that past Sunday when we came into opening was between these red horizontal lines, 96.50 and 96. Most of the trades for the week occurred in there and we closed above it. That's bullish bias. We had this demand zone down here, green, tested it Thursday and Friday, rejected and went up. Again, bullish bias. We still have this huge candle that occurred there and we didn't close above it. Looking at the 30-year bonds, also past Sunday, opened here. Look, the red horizontal line, 161 and 163, and the mid 162. So we had a lot of trading above and below that 162. But right off the bat, from Sunday, it went start trending higher into this prior supply zone of sellers. Rejected it, went lower. Consolidation, broke down, went lower. Didn't take out the Sunday highs. Did consolidation, breakout, rejected at 163. Pay attention to this. Again, likely setting up as another fake out on the higher time frames to show that the momentum is likely downward. And the S&P 500 futures. Yep, as we expected, Sunday opened up bullish, tight consolidation, opened the cash market and trended lower into the Tuesday lows. Consolidation from Tuesday into Wednesday, reverse popped. Well, bearish pin bar right up here on Thursday, huge sell-off and trending lower back into that demand zone of buyers. So there was a lot of whipsaw during the week on the S&P 500. We still have this consolidation down here, holding up because we closed above it. Coming into the holidays, more bullish bias in the equities, and sometimes happens in the US dollar. Crude oil, again, priced in US dollars, as all commodities are, often trade inverse than currencies. So we had the demand supply zone up here, red, demand zone down here in green. So from Sunday, past Sunday, when we opened up into the supply zone already, knowing that's likely sellers stepping up again, and that's what happened. Sunday night, we opened up into that supply zone. Sellers, trend reverse, went lower, broke below this short-term demand zone of buyers, went to this key level down here. Let me zoom out so you can see more. Yep, so went there, which was a prior supply area broke above that, went down. So again, key levels. Let's zoom in. Yep. So from Sunday, like I said, went down here. Then Wednesday, which Wednesday during primary market hours, the United States releases the economic data on crude oil inventory for the prior week. Reversed, trended higher. Back into what? The supply zone of sellers. Reversed, went lower on Friday. Again, we did close above the lows of the week and inside that range. So tight consolidation here on crude oil. Look at that trading range below the 73. And most of it occurred, the trades, most of it occurred to $70. So huge consolidation, building consolidation for a breakout for some point in trend. This is a trend, and this is a consolidation. Take note. Looking to get into the trade, whatever it goes, somewhere close to either at or just after it occurs of the trend to catch most of that movement. And gold. Sunday night opened up tight consolidation when it rejected the supply zone. Retracement to the Tuesday. And then even Wednesday, between Tuesday overnight and Wednesday, went down. Huge trading range here. Huge intraday. Fake out. Because didn't close down here. Yep. Reversed, went higher and closed higher Friday. So we closed higher Friday than most of the week. That's bullish bias. And good job out of my Patreon members that got in the trade ideas I shared with those gold mining stocks and gold stock ETFs. We're already have gains. Cryptocurrency, Bitcoin off. Very bearish still. Yep. Past Sunday. Fake out. Look at that. Went above 50,000. Sold off. So look at this. Most of the trades here occurred below the 49,000 and above the 47,000. Tight consolidation, but a lot of whipsaw, not taking out the highs of Sunday. That's bearish bias. Past Sunday highs, we never took it out, but we did take out the lows of the week, which originally were here at the start of the week, and we went lower. Again, bearish bias cryptocurrencies, majority of them. Let's go look at also the intraday on the U.S. Major currencies. Yep, the U.S. major currencies. So again, we'll look at the 4-hour candles on the major currency pairs. All these currency pairs are inside the US dollar. First, look at the euro. Past trading days. Sunday opened up, trended lower. Interesting, stayed in a tight consolidation all the way till close of Tuesday, made a lower low consolidation. During primary market hours Wednesday, huge trading range coming into this supply zone, demand zone, touched it, went up to the supply zone consolidation and rolled over to close lower on Fridays, which on this Fridays down here, past Friday, we did close lower than this Sunday trading range, giving bearish bias to the euro, but not going into the demand zone yet. But majority of it is an consolidation. Japanese yen, again, pay attention. Japanese yen is a safe haven currency compared to euro. So from Sunday, tight consolidation, holding up above that red horizontal level. And then Wednesday, breaking below that, tight consolidation down here. Look, bullish pin bar, tight consolidation, and impulse move up, consolidation, impulse move up, retracement, closing above that red horizontal line, giving a bullish bias. So we still have suppliers up here selling, but again, closed that significant price level right there. British pound from the past Sunday, consolidation, coming into that demand zone, buyers rejected it, went up. Wednesday, primary market hours, went down, tested it, rejected it, went up, made their notes all-time highs Thursday night into that supply zone, which you shouldn't have been surprised to been selling up there, and rolled over Friday to a lower. Yep. So most of it was in consolidation, not a lot of whipsaw on this point looking at it. Let's just show you that longer duration so you can see some stuff. Yeah, it's bearish. It is bearish. Japanese yen. Much more consolidation over longer duration. And the euro, yeah, it's bearish. So again, several of the currencies in the Europe are bearish against the US dollar. Canadian dollar, what a lot of us saw here. Past Sunday, just reversed, took out that low from Friday, trending lower. Most of it was trending all the way into the Wednesday, had that huge reversal, impulse move up, which was just a retracement of all that week. Consolidation, breakdown to close lower on Friday. Yep, so Friday closed lower than that Sunday's open, bearish Canadian dollar there. Swiss franc, another safe haven currency. Most of it has consolidation around here too. So past Sunday, we'd opened up, rolled over to that significant round number. We went up to test the supply zone, all the way deep retracement. Here on Wednesday, we took out the low of Sunday, rejected the supply zone, went back up to test again the supply zone. Demand zone, supply zone, and Friday roll over. So again, this safe haven currency was more weaker than the euro, than the Japanese yen, and the Australian dollar, labeled green as demand zone buyers. So Sunday, we opened up tight consolidation. It was a slow grind down. So it got to Monday and Tuesday and tested this supply zone, demand zone buyers, consolidation, big impulse move on that Wednesday, trading up. Didn't stay that long above that number and roll over. Majority of it is an consolidation, building momentum to break out of. Again, that was the lows. So you see Australian dollar is nice. It's staying above those lows. So it's giving more bullish bias, this currency, better than the European currencies. Let's show the Canadian too, where this is the Canadian low doing retracement. And the Australian dollar is building staircase pattern higher high. So again, this is the one to be looking at to be bullish bias, trading long against the US dollar on these retracements. Now I'm going to go to the higher time frame, the weeklies. Each candle is a week. Significant events occurring. US dollar index, the past several weeks, consolidation. The current week closed green, higher high, higher low. Yep, closing above that inside candle. So massive consolidation here. Potential, because potential reversal. Again, it's bullish bias holidays, but this momentum here could reverse. We already see which currencies in there are reversing. So again, it's the very bearish euro currencies that are the holdings up because they represent a big percentage. The three largest currencies in the US dollar index are euro, Japanese yen, British pound. So since the euro and British pound are very bearish, that's giving favor to the US dollar here. But some of those currencies are turning bullish. Yep. 30-year bonds, huge consolidation, 2 weeks in a row, inside candles. It's going to have a high probability. Yeah, it may retest this, but the higher probability is you expect it to go lower. And the S&P 500, red, higher high, higher low, and back inside that range. Tight consolidation there. Crude oil, again, priced in US dollar. So we had that trend down, retracement here, now consolidation, and close the inside candle, small, tiny little candle. Watch for a breakout above that or below that this week. Maybe even Sunday night might occur, and that may become the new trend. Maybe the new trend to catch a nice, good gain profit in one way or the other. And gold on the weekly. Huge trading range above and below that prior week. Look at that little tiny trading range on a yellow candle, and whipsaw up and down. Yep. Again, bullish bias. Tested the demand zone of buyers, rejected and closed up, and also closed above that inside candle. Bullish bias, nice consolidation. Significant bullish pin bar here, bullish pin bar here. The momentum is grinding to the upside. And cryptocurrency on the weekly. Red, lower high, lower low, closed below that prior week. It's bearish, the Bitcoin.